Hi, everybody. Roy Paith with CMG Financial here today with Theron Hardersen with the Tina Harderson Insurance Agency. How's it going, Theron?
I'm doing great today, Roy. How about yourself?
I'm doing much warmer than you are.
Yes, you are.
We can timestamp this date and let them know that it's about going to be 10 degrees negative for you. So anyways, so Theron, I just want to get together with you and ask you some questions about common questions I get from clients or that I know have been brought up regarding insurance. It's a huge part of the process when buying a home, amongst other things, obviously.
Sure.
But the insurance is very key, and you guys have played a pivotal role for my Illinois clients in helping with the insurance needs when we get a quote and it doesn't look like a great quote or they just don't know where to go. So first thing is, I guess we should start with, what is homeowners insurance?
That's a good question, because insurance is basically the transfer of risk. That's what insurance does, is it transfers the risk of my home being destroyed from me having to be responsible for replacing it to the insurance company being responsible for replacing it. So whether your home's lost in a fire or a tornado or otherwise damaged by a storm, instead of the risk falling directly on me to come up with the money out of pocket, the risk then goes to the insurance company to take care of it. Homeowners is what actually covers the cost to rebuild your house or to fix the partially damaged portions of the house. There's typically three pieces to the puzzle of a homeowner's policy. You're going to be looking at your dwelling coverage or the structure itself. Another coverage is considered personal property, which the best way I had to differentiate between the two is if you take your house and magically lift it up and turn it upside down and shake it, whatever falls is typically going to be personal property. That's your stuff. That's your furniture. That's your appliances. That's your clothing and that kind of stuff. The dwelling is the stuff that makes up the actual physical structure of the house. And then the third part of the coverage that often gets overlooked is actually the liability portion, which protects you in the event of a lawsuit, either from a slip and fall at your home, but it also covers a lot more than just the slip and falls. It also covers libel and slander and accidents caused by you anywhere or members of your family anywhere in the world, as long as they're not in a motorized vehicle.
So are you saying that if somebody slipped and fell at my home, they might sue me?
Chances are pretty good that there would be a lawsuit involved. Friends are friends, family's family, but once money gets involved, especially large amounts of money, it's pretty much every person for themselves.
I gotcha. So why do I need homeowners insurance? I think you kind of covered that. My house burns down. I'm not going to be able to write a check, obviously, for all that coverage. Things, it can be something more minor, but it allows me to transfer to pay a little bit for a big loss rather than paying for the full loss. Is that a good way to look at it?
That is almost exactly as I would put it.
Okay.
The short answer is because you probably can't afford to pay to repair it by yourself.
Right. So do I have to have homeowners insurance?
It's not required by law that you have homeowners insurance. However, if you've got a mortgage out or a loan on the property, the bank that owns that note is going to require you to have insurance on that. We do have clients who have $600,000 homes who don't have a mortgage on it and actually self-insure themselves. In the event that there was a tornado that knocked down their house, they're on the hook for the entire piece of it. But for the most part, even if you do have your house paid off, like you said, your out-of-pocket costs for the cost of insurance is so minimal compared to what it could be if you had to actually replace your house.
Yeah, it seems like such a small amount of money to offset a large amount of money, I guess. So what are the different types of homeowners insurance? Are there different types of homeowners insurance policies?
For our purposes, we'll basically take a look at two different kinds, if you will. There's what's known as ACV, or actual cash value, which is where you insure the structure of the house for what it is actually marketed value at today's cost. And that would be, also takes into account depreciation.
Okay.
So if you've got walls that are damaged, in terms of the paint is old and fading and scratched and things like that. It's not worth as much as it would be if it were brand new. Then we look at the other type of coverage, which is replacement cost, which is what most banks are going to require for the purposes of acquiring a mortgage, is that your home is insured for replacement cost value. And that is no matter what it costs to actually, no matter what the house is worth and what condition it's in today, we rebuild it brand new.
Okay, so if I'm listening to this correctly, I don't want actual cash value because of the depreciation. My $300,000 house is probably not going to depreciate in value or cost to build it, especially when looking at like the new lumber costs and everything. So replacement cost means, hey, it's going to be rebuilt the way I had it, and I don't have to really worry about anything else.
Well, there's other differences between the two too. Additionally, the amount of the gap that you'll find between what the actual cash value actually covers and what the replacement cost actually covers is tremendous. For example, if a fire burns down half your house, you can't go in and just build half a house. You've got to take the existing structure out, and that costs a tremendous amount of money with all the rules and regulations that the EPA has on how that material has to be handled and things like that. There's a lot of different expenses in there that are covered under the replacement cost.
Okay.
That aren't covered under actual cash value.
Okay, I gotcha. All right, so how much insurance do I need?
Well, for the dwelling, you're going to need enough to completely cover the cost of rebuilding the house if it were destroyed. And that includes the money for debris removal and taking away the existing structure so that they can actually get in and start rebuilding a new house again. For your personal property, this is where you're actually going to have some input in helping determine how much you put a value on what it is that you actually have. For liability, you're not only going to want enough to cover your current assets, but also you're going to want to cover your future assets and earnings as well. Well, like today, when you buy the house, you're going to have a big mortgage. Well, as time goes on, as you pay that mortgage down, then you develop equity in the house. And that equity, in the event of a lawsuit in the future, can be attacked. So you want to make sure that you've got enough liability coverage to cover your future equity in the house as well.
Okay, now that makes sense. Now, when I'm insuring the house, I'm sure there's add-ons, like if I've got this great collection of Rolexes, standard policy probably not, I'm going to want to get some type of add-ons to that, right?
Yeah, that's one of the things that I highly encourage everybody to have a direct conversation with your agent about the things that are important to you and the things that are unique to your household. For example, there's going to be limits on jewelry, furs, art, silver, a lot of the collectibles. There's going to be certain limitations on how much the company will cover for each piece, as well as for all of the jewelry that you have. Typically, we'll see limits of like $5,000 for all of your jewelry, up to $1,500 per piece, unless you have an additional piece to the policy, often called a rider or an addendum, that adds additional coverage specifically on for that. Okay. And that's actually one of the great things to follow up on in terms of having a conversation with your agent, because a lot of people aren't aware that like your sewer line from your house out to the street, or your water line from the house out to the street, is not considered part of the house. Okay. So if a tree grows roots into your sewer lines and whatnot, and those have to be repaired or replaced, that's not covered under your homeowner's policy. But there are ways to help cover that.
And you, speaking of that, you may be saying, well, that's probably not an issue in my area. It doesn't have to be a tree, because I can tell you from experience, having bought a new home, we had that issue. Apparently, when they ran the line, somebody over tightened it. Over time, it started to wear through the piping or whatever. And about 60 days after the home warranty that came from the builder expired, we had that issue. So I can tell you firsthand that that's not an inexpensive thing to get taken care of. Mm-hmm. Definitely something that's important. So Tennessee, we don't have basements. Well, we have them, not very many. But sure. Illinois, I've got a beautiful theater room in the basement. Is there additional coverages for something like that as well?
Absolutely. One of the things that isn't included in the normal policy, insurance companies hate water, is a great way to put it. Flood is not covered. Therefore, if we get a lot of rain and your sump pump in your basement goes out and water comes up through the sump pump, that's not going to be covered unless you have a rider, which is called sewer drain backup, which does cover the damage that the water would then would take place and would occur.
Okay. Yeah, and that's knowing Illinois summers with all the rain, sump pumps. I mean, a little couple $100 item could cause tons of damage. So
I think at the beginning of our conversation, you had mentioned that we're looking forward to a nice temperature of about 10 below zero tonight. Yes. And one of the challenges that brings with it is bursting pipes and frozen pipes. And fortunately, that would be a type of water loss that is covered under a normal homeowner's policy, because there's two words to remember: sudden and accidental. When those two words come into play, typically something's going to be covered.
Sure. So let's talk about deductibles, because I remember back, I want to say when we bought our first house, a $500 deductible was pretty normal at the time. I don't think that's the case anymore. So what is a good deductible, or what do you guys, how do you handle deductibles? Well,
deductible is what you're going to be on the hook for in the event that there is a loss and you file a claim. Years and years and years ago, a $500 deductible was a pretty safe, good place to be. In today's world, there's so many claims, and it's caused the whole industry to experience rate increases. And so rates are relatively high compared to what they were 20 years ago. However, the part that you can control is how much you're going to share in that risk. So by taking a higher deductible, you're going to lower your premium. Now, realistically, people aren't going to file a claim on your house unless the damage is at least $1,000 over your deductible. Okay, but it is unique based on people's situations. You know, I usually wouldn't recommend that a retiree who's living on a fixed income take on more than $1,500 deductible, because it's difficult without a constant flow of income coming in to be able to raise that kind of money and set it aside to pay off your deductible. Okay. However, if you've got a situation where you know you've got a good income stream and you have a little bit in the bank, not to say that anybody wants to come up with the first $5,000 of a home claim. However, typically when you file a claim for your house, you're looking at a really big expense. You know, $25,000 or much higher, and $5,000 isn't really a big chunk compared to the amount of outlay, I guess, that the insurance company is going to be laying.
So I have a basement, it flooded. Yeah. I just spent $100,000 to finish it, and
between $1,500 and $2,500 is usually a pretty good place to start today.
Okay, perfect. So, I know there's discounts given. How can I lower what are the different ways, I guess, to lower my annual insurance cost?
Good question, because your deductible is one way, certainly, that you have control over being able to help determine what the premium is going to be, because the higher deductible you take, the lower your premium will be. However, when you work with a company that does bundling, this is a great example. If you bring your auto insurance over with your homeowner's insurance with Farmers, you'll not only save about 12% on your auto insurance, but you'll save almost 20% on your homeowner's insurance as well. And then when you bring in a life insurance policy as well, you're looking at another 5% off your house and another 3% off your car. And so the more policies you have, actually, the less each policy is going to cost because of the discounts that you have for the bundling.
Yeah, gotcha. So I've talked with you, we've gotten the homeowner's insurance, we switched our cars over, get into the house, but we don't have any life insurance. So do you guys have specific products? Because I know years ago when we bought our first house, that was a big thing for us to look at is what if something happens to me, or what if something happens to my wife? We had two incomes, we now have one income, but we still have this big mortgage we got to pay. So life insurance, I think, is a very important factor that people overlook. They get into the house, they're unpacking, and they don't care about insurance anymore.
Yeah, that's one of the challenges that we deal with, specifically with people that are buying a home for the first time, is the main goal for them is to be able to get all the paperwork done just so they can get in the house.
Right.
And then when that's done, the hair comes down. Now we're going to start trying to decorate and move everything around, and we're just swamped and we don't want to think about insurance anymore.
Right.
However, this is probably one of the most important things that you can address at this point in your life, because it helps protect the rest of your life and the rest of your family. Life insurance is a great way. Term is one of the products that I usually recommend to cover things like a mortgage or college expenses and things like that, that over time are going to be kind of paid down. So the need for life insurance as you get older is actually going to decrease because your income has increased and your expenses typically are decreasing as they get paid off and things like that.
Okay.
One of the strategies that I usually recommend to especially first-time home buyers is to get a term policy, but for a really high amount, like $1 million or more. Because as time goes on, you're going to start acquiring more debt, typically. You buy the house, then you get a promotion in the job and start getting new cars. And then kids come along, and then college expenses come along. And it's much less expensive to get a large policy when you're young than it is to get multiple policies as you continue to get older.
Right. Not trying to add on 10 years later, add on, because you don't know what your health situation is going to be.
You got to make sure that your health and weight is still within the guidelines. So it's never going to be less expensive than it is when you're young and healthy. And the best part is, as you get older and as certain things get paid off and paid down, you can actually reduce the amount of life insurance coverage you have, and that rate still stays the same as it was based on your health rating that you got when you first got the policy. Okay.
All right, that's good. So this is a question it's come up and I've never even asked you, I don't think, but does it cost me more? I've got, let's say, a 2-year-old house and I decide, you know what, I'm going to buy a fixer-upper. I'm going to restore this old Victorian house from 1885. I don't even know if that's the right date for a Victorian home, but you get the message. An older home. Is there a cost difference for the two?
Well, typically you're going to find the newer homes are actually less to insure.
Okay.
And part of the reason for that is they cost less to build. The older homes, the Victorians and things like that, have plaster walls. They don't put plaster walls in most new construction nowadays because drywall is so much more affordable. And so, we insure homes that have horsehair for wall coverings.
Okay.
And it's just not something that's made anymore. And so the replacement cost for that is much higher than a couple sheets of drywall.
Okay.
As well as your electrical. In a newer home, there's going to be much less chance of an electrical fire because the wiring is intact and up to today's code.
Okay.
If you look at a house built in the 1800s, the fuse box could be anything. The fuses could be pennies or all sorts of different stuff. And there could be a lot of inherent risk from having the older wiring.
Right. So do I have to get a home inspection before getting homeowners insurance?
You typically don't have to have an inspection before the policy is written. However, typically you're going to have most insurance companies hire a third-party company to come and just visually inspect, number one, that there is a dwelling on the property, and number two, that dwelling is in a condition that the insurance company wants to cover. It doesn't have boarded up windows. It doesn't have missing shingles or shingles that are peeling off. It's got relatively fresh paint on it. It's not peeling and all that kind of stuff. Okay. So there won't be somebody coming in and walking through your house and being invasive. Okay. Typically and actually some companies are now using drone technology to be able to send a drone up and take a tour of the property without the homeowner even knowing.
Oh, that's cool. That's an idea. So you're going to come by and see that trampoline I've got in the backyard and the pool that I didn't say I had and those extra risks, right?
I always recommend being upfront with your insurance agent. If you finish your bathroom or you finish your basement and you don't necessarily want to tell the tax assessor, that's fine. But make sure your insurance agent knows. We don't report it to anybody. We just want to make sure that you're properly covered the way you need to be.
I got you. So we've got all I think we've covered, bring the auto over, you got the life insurance. Tell me about umbrella policies. What are those?
An umbrella policy is where you're going to get the most bang for the buck in liability coverage there is. What an umbrella policy does is it's a standalone separate policy, separate from your auto, separate from your house, separate from the motorcycles or snowmobiles or boats. However, it'll add a blanket additional amount of coverage on top of the underlying liability portions of each of those policies. Now, I know that's a big mouthful to say, and it doesn't make a lot of sense, but when you look at a picture and you've got a car with $100,000 in coverage per person, $300,000 in coverage per occurrence, and $100,000 in property damage, but you've got two cars with the same coverages and a house that has $300,000 in liability protection. If you add $1 million umbrella on top of that, the reason it's called umbrella is it acts like an umbrella and covers all of this. Now you've got 1.1 million in coverage per person for liability on your car, 1.1 million per occurrence, 1.1 million for property, and 1.3 million for liability coverage on your home.
Okay.
And the umbrella policy for your house specifically will add additional things that aren't necessarily covered under your standard homeowner's liability. For example, firearms. If somebody's a gun owner and is taking out their gun and cleaning it and playing with it or showing the next door neighbor or something like that, and it accidentally discharges and injures somebody, that situation, you would be covered under your homeowner's policy for the lawsuit that's going to be coming. But in the event that somebody breaks into your house and threatens you bodily harm, in the state of Illinois, you've got every legal right to defend your property and be able to shoot that intruder. However, that intruder or that intruder's family can still then sue you for the damage that you caused to the robber, which is not covered under a standard homeowner's policy because the act of pulling a gun and shooting somebody is not sudden and accidental. You did it on purpose, but it is covered under an umbrella policy. So it's something that I specifically recommend for firearm owners to be able to help make sure that they're adequately protected as well.
Never even thought of that. So that's great information. So I think today we've gone through some questions, but I think more importantly, we've nailed down the fact that going online, getting your insurance by filling in a little bit of information is not a good idea. Unless you like to, maybe you like the roulette wheel and you like to gamble a little bit. That's sitting down, maybe not sitting down and face to face these days, but just sitting down and talking with somebody over the phone about your coverages, your needs, your wants, things like that makes way more sense than, it's not always the cheapest rate. It's what's got the best coverage. Because you just quoted a client of ours, and I think their policy was more expensive that they were looking at. They got their wind and hail damage deductible was higher. There was a couple different areas that their insurance coverage was not quite where it should be, and it was more expensive anyway. So when do you recommend, or how often do you recommend checking in with your agent? Or I know you guys actually do an annual review with clients, but
correct.
What once a year, is that usually pretty good? I
would usually recommend at least once a year, probably not more, because you're not going to get renewals. Your homeowner's policy is good for a year, but if you don't do it at least once a year, every 3 years is about as far as you want to go, because your company is going to come out with new discounts and they'll come out with new products as well that we can actually take our clients and move them from one product into another, and it's the same coverage at a lower rate for them.
Okay. Yeah, and plus you have life changes, you have kids, you have different things you're doing. Maybe you got a new recreational vehicle or whatever that's not even listed, or I'm sure there's a lot of different reasons. So, well, Theron, what's a good way for somebody, whether they're looking to buy a new house or just get a checkup on their insurance, how can they reach out to you guys?
Easiest way is by the phone, 630-892-2388, or just shoot Tina an email at tanderson@farmersagent.com.
Perfect. Well, Theron, thanks again for your time today. I really appreciate it. This will definitely be very informative for future clients, as well as just anybody that's out there in the market for insurance, because I mean, things are constantly changing, and just over the last 10 years, I know we've seen such a change in car insurance and everything.
Mm-hmm.
Everything's more expensive now. So
well, I think we dropped, we talked about a couple of hidden gems that are in our conversation, but I think the biggest takeaway that people should get is talk to somebody, and
yes.
talk to somebody who knows. Because my neighbor said something doesn't make it true.
Very true. Very true. We have the same issues in the mortgage industry. So perfect. Well, I look forward to talking with you again, Theron. Thanks again for your time today.
I appreciate your time and appreciate you, Roy. Thank you very much.